Now we have understood P&L, we have understood balance sheet. There are few KPIs, key performance indicators, that all of us as the company secretaries need to be aware of and use them in doing the financial analysis of your company. I'm sure with this session that we have today and what we are going to have in next 2-3 days time, all of you will be able to independently do the financial analysis of your company. I'm going to help now with some of the KPIs that you can use for doing the financial analysis. The first KPI is the gross profit ratio. And how do you calculate gross profit ratio? You will calculate gross profit ratio by taking your gross profit and divide it by sales of the company into 100. And this is your gross profit ratio. Higher the gross profit ratio, better it is for the business, of course. A very high gross profit ratio, remember, is an indicator as to the attractiveness of the industry. So if a company has a very high gross profit ratio, that means this company belongs to a very attractive industry. Now what does it mean? It means only when an industry is attractive, the company will be able to charge a very high selling price. Only when an industry is attractive, the company will be able to purchase the raw material at a low price. And when a company is able to purchase the raw material at a low price and sell the finished goods at a high price, then the gross profit of that company will be high. And that is what you can calculate, and that is how you can calculate your gross profit ratio. The second KPI relating to the profit and loss is EBITDA margin. And how do we calculate EBITDA margin? So you take the figure of EBITDA from your P&L as we discussed yesterday and divide it again by sales into 100, and this will give you your EBITDA margin ratio. And please remember, as we discussed yesterday, EBITDA is operating cash. EBITDA is operating cash profit, right? Or cash operating profit. And higher the EBITDA, better it is for the business, and that is what you can use. The third KPI that you can use is NPR. NPR is net profit ratio. And how do we calculate net profit ratio? So we will calculate the net profit ratio NPR by taking the net profit from the P&L, dividing it by the sales and into 100, and this will give us the NPR. How to calculate the debt equity ratio? I've already explained to you in the previous discussion. How do we calculate the current ratio? Also, I have explained to you in the previous discussion. How do we calculate return on equity? Friends, I am sure as far as the calculation of return on equity is concerned, I'm sure none of you will have any doubt. None of you will have any doubt as to how to calculate the return on equity. And that is take your earning after tax and divided it by the equity. And all of you know it very well as to what the equity is. Equity is the share capital, share premium, and also reserves and surplus put together. So this is how you will calculate your return on equity. There are doubts in the minds of everyone as to how do we calculate ROI and ROCE. So maybe you can, all of you, all the participants can just write in the chat box as to how will you calculate return on investment and how will you calculate return on capital employed. And you have a time of 30 seconds for doing this.